Hey everybody, this is Ryan Maurer, and we're going to do some swing trades for the month of August. We're going to talk about what I think are some of the best trade setups that are out there. Now, the stock market has been rallying for months on end now, following a huge sell-off with the coronavirus, and so there's a lot of slim pickings right now. There's not a lot of great trade setups. So we really got to turn over a lot of rocks here to find some really good, solid risk-reward trade setups that I talk about in all my videos. It's not about just jumping into the most hyped up stock, whether it's Kodak or Tesla or silver. It's about finding those setups that are the best risk reward plays here, because you can make all the profits in the world, but one slip up and you're done for. So let's go ahead and look for some good solid trade setups here that we might be able to find beneficial in the days and weeks to follow. Now, there's a lot of talk about when is this market ever going to top. I mean, we just had earnings. We had Amazon, we had Facebook, we had Apple, and we had Google. They all blew out their earnings. They're all trading higher. It's mind-blowing after hours to see this kind of price action, to see the NASDAQ continue to push higher to new all-time highs. It's very reminiscent of the 1990s when the stock market pulled back about 30% and then went on to triple in price before it finally had that 87% pullback. So the hype is real. There's actually earnings this time, whereas in the .com you didn't have that. That doesn't mean that it's sustainable, the trajectory that the market is on across the board. So the S&P 500, it's looking at making a play to all-time highs. The NASDAQ's already done it. The Dow's not too far behind, and the Russell Index, which has none of the FANG stocks, are actually looking to go positive on the year. So what kind of stocks can we look at? I've got some unique setups here. Now remember, none of these setups are guaranteed to be winner. I'm not like these other blowhards on YouTube where they're going to talk about, hey, this is the stock that's going to make you $1 million or $1,000 a day. I don't do that. I give you the reality of the trade setups. I tell you, look, this is your setup. This is where I would find to be an ideal entry price. But if the trade goes against you, this is where I would be getting out at. This is the kind of trade setups that you need to be seeking, not after these get-rich-quick schemes that everybody seems to flock after. No. Stock market is not easy. If it was easy, everybody would be in it, everybody be rich. That's not the case, nor has it ever been the case. Yes, there's some people that are doing really good. Maybe they've made a few $1,000s, maybe they've made $1 million. But in the grand scheme of things, they're either a thousandaire or a millionaire on paper. It doesn't even matter, because in the end, they won't manage the risk and they'll lose it all. What I want you to do is to be able to keep it all. And you do that by managing risks. So let's go ahead and jump into 4 long setups and 1 short setup. We're going to start that right now. The first trade setup that I want you to look at, CGC, Canopy Growth. Now you have this very long-term inverse head and shoulders pattern, but check this out, huge neckline. Now in order to get long on this stock, I would need for it to break through about 2060 with a stop loss right below 1808. That's actually the lows from July 30th. It needs to hold those lows, and it's a little bit of a wide stop loss. It's a little bit more than what I would typically use, so a little bit more than a 10% stop loss, but there's a huge opportunity here for it to get to 25, which would be the highest from January. If it could break through that, there's even the potential for a gap fill going all the way back to August of last year. So there's some huge opportunity here from anywhere of 3-to-1 to 5-to-1 in terms of reward to risk ratio. And when I talk about the reward to risk ratio, it's really talking about how much money or profits can you realistically expect to make off of a trade for the amount that you're risking. So if you can make $5 for every dollar that you're risking, that's a pretty good trade setup. You don't find a lot of those very often, not at least in trading. Investing, yes, but investing, it takes a little bit longer to realize those gains. And trading, if I can get 2-to-1 or 3-to-1, that's usually a pretty good trade setup right there. Here on CGC, you have about $5 of upside for about $2 of downside. So you have a reward to risk ratio of about 2.5-to-1. If it reaches that gap and fills it around 30, then all of a sudden you got almost 5-to-1. Not too bad. Now remember, CGC reports earnings on 8/12. I am not a fan of holding through earnings. Some of you guys may be, but you got to know that there's a lot of risk that goes into earnings. These things can drop 20-30% at the drop of a hat. So be aware of it. I don't hold stocks through earnings, but I like to say in my videos that there is a lot of risk that goes into these earnings. Now, a little bit less risky is the Netflix, NFLX. Check out this rising uptrend off of the March lows. Now, if you can get in under 496, that's ideal, but it needs to hold this rising trend line. But even more so, the 50-day moving average. Check out the 50-day moving average, because like the last 4 times that it's tested this 50-day moving average, it's held and bounced pretty well. So if it holds the 50-day moving average, that's a good thing, even if that means dipping a little bit below the rising trend line. but if it gets below 462, which is where the 50-day moving average currently is, then that's my exit out of the trade. Now let's say Netflix makes a push back to its all-time highs, more than a 10% move, which is ideal, and gives us a reward to risk ratio along the lines of about 2.5 to 1. That's nice too. You also have a little bit of a rising support level going back to the April highs that holds at around 477. So you have 3 support levels. You have the rising support level, you have the rising trend line, and you have the 50-day moving average. All 3 of those, if they don't hold, that's your sign to get out of the trade. But if they hold, there's a good opportunity for us to see new all-time highs again in Netflix. And if you look at the stochastics down on the bottom, it's coming off of oversold levels. So it's primed for a bounce right now. And with the FANG stocks doing so well during earnings, I expect that we'll see a pop in this stock. Now the next chart is a play off of the Bitcoin phenomenon, GBTC. Check out the declining trend line here. It's finally broken above it. It's pulled back to that support level, and it's trying to bounce now. That's where you want to really be targeting your entry price here. If you can get long somewhere between like $12.35 and $13, that's your ideal entry space right there. If it pulls back and drops below the July 30th lows, that's where I would want to get out at, because then all of a sudden it's breaking that support level that it bounced off of, and that's not a good sign either. Now you also have a rising trend line going back to the March lows that has still continued to hold. But it's so far away, it doesn't make for a good place to put your stop loss at. But the one thing that I really like about the Bitcoin chart, and I've been charting it for like the last 2.5 years now, is that it behaves very well technically. But now you also got to remember, it trades 24/7. So there is a very good chance that you could wake up to a significant gap lower or higher. Obviously, if you're long and it gaps higher, that's a good thing. But over the weekend, it still continues to trade. It's just not reflected into this particular chart here. But look at the volume that's been pouring in recent days. This thing's also rising in sympathy with like silver and gold. So there's a good chance this thing continues to march higher as long as the commodities remain a hot sector. Now check out Twitter. Again, another inverse head and shoulders pattern that has confirmed. It's broken out, but it's pulled back to the neckline of the inverse head and shoulders pattern, and it's settled in here quite nicely. Now with Facebook earnings being so positive, I'm now looking for a rally out of Twitter. Now you see there's a 4-day consolidation pattern here. I want to get long on a break of that 4-day consolidation pattern at around 37.60. If it breaks through that, then we want to see it get through the $40 level. There's a potential for it to get as high as $45 here, and it's already reported earnings. That's a great thing too. Now in terms of stop loss, if it breaks back below the neckline, I'm out of here. That means that the trade fell apart. It's not a good one to be in any longer. That's going to be around the 35.60 level. Those are the trading parameters that I'm going to be working with going forward. So you have a possible price ceiling of 45.46, which gives you about an $8 per share reward versus about a $2 loss. So that's about a 4-to-1 reward to risk ratio. Again, those are the kind of trades that you want to look for in the stock market. Now the last one is Beyond Meat. Not Beyond Me, Beyond Meat. You have a head and shoulders pattern. It hasn't yet confirmed, but it's getting really close. I'm looking for it to break the 120 level. If it breaks that, then that's where I'd want to get short at. But I'm going to put a stop loss a little bit above 130 there, because you have some consolidation, a bear flag perhaps, and if it can break back above that, I want to get out of that trade. But overall, it's a pretty well-formed head and shoulders pattern. Now, the thing about shorting stocks is that it's very difficult in this market. You get some good short setups, but they erode away technically. That may happen with Beyond Meat, because when you have a market that's constantly rallying, it can pull up a lot of stocks in sympathy. That may happen with Beyond Meat. I'm not 100% sure, but you want to be aware of it. I still want to give you guys trade setups in both directions. Now, right now, it's predominantly to the long side, but I still want to throw out a short setup there for you to take a look at. Also, I'd encourage you, support this channel, buy some of the merch that you see down below. It helps me continue to put out some really great videos. I appreciate that. These are some of the softest shirts you've ever seen. They're great. I bought like 6 of them the other day. They're wonderful. There's other stuff down there too, but it helps the channel. It helps me grow. I'd encourage you to go ahead and buy some of the sweet merch down below. And if you like this video, make sure that you like it and subscribe so that you get notified when I make more of these videos. Down below, I want to hear about what stocks that you're targeting for the month of August. Which ones are setting up the best for you? Because there's a few of them out there. They got earnings coming up, so I'm going to wait for them to report their earnings and then make my move on them then. But right now, these are the trades that I'm looking at. Of course, nothing's a guarantee in this market, but these are the ones that I find the most attractive at this moment in time. Take care. God bless.